Hey everyone, welcome back. Okay, market is selling off a little bit into the close. It's unfortunate. It is the kind of volatility that we're expecting. We had some of this pain earlier today. We're seeing a second kind of wave of this pain. We had this earlier in the week as well. We had a couple red days, 3 days of red this week. Today's no exception to that in terms of the NASDAQ. Are getting rejected by that 50% Fibonacci. We are seeing cryptocurrencies move as well. We recently saw BTC, I know there are a lot of lines there on the day chart of BTC. Saw BTC get all the way back, look at this, folks, to breaking 45,000 as of this morning, early morning. Unfortunately, it's kind of rotated down a little bit on just broader uncertainty around that, the ultimate impact of rising interest rates. It's really what's hitting us. Now, make sure if you haven't yet, watch my video that I posted this morning on good news. Definitely want to see that good news, especially on a day like today where you've got a lot of red. But one of the things that I like noticing is look at the stocks that are performing decently today. You've got JP Morgan, Target, Caterpillar, John Deere, McDonald's, Visa. Those are the companies that are green today, right? In addition to, of course, some the momentum that we're seeing, GameStop's doing very well, and then the cannabis stocks. But more importantly, I just want to mention that these are very, very defensive. And it's just another reiteration that institutions right now are quite fearful. There's still a lot of fear in this market. And in my opinion, that fear, and we've said this many times before, that fear is not going to go away for a while. And so that's why we're not going to see those new all-time highs for quite a while. That's okay, though. That doesn't mean you don't want to take advantage of opportunities to buy. One of the things that I like doing is looking at some of my favorites. And if I personally, I like to write down target numbers. So let's say if I have written down for Trade Desk, buy under, say, 60. Well, hey, it's at 64.81 right now. No problem. I don't need to buy. Oopsies. I accidentally moved my fib. I don't like doing that. Pro tip. It's not even really a pro tip. It's like a noob tip. Lock your lines before the X. I'm just going to delete this one. It doesn't matter. Let's get rid of that. But anyway, I like to have written down so that way I don't get I'm not like hunting, like, oh, what am I going to do today? It's very prescriptive. Like I write down exactly when I'm going to buy something, when I'm going to sell something. So for Trade Desk, for example, that target for me is $60. If I can get more shares of Trade Desk under $60, great. Now I'm very well up on my Trade Desk position, somewhere between 30 to 40%, which is excellent. Obviously, today's a red day, though. You're down 5.4% just in a day. And it's just another one of those signals of a pretty rough, bearish market. I can't really say we're in a bear market because we don't have that full 20% drawdown on the NASDAQ or the SPY anymore, NASDAQ 100 and the S&P 500. But it certainly doesn't feel euphoric, right? I know a lot of folks, how is it not euphoric that we went up for 8 days in a row or whatever? It's like, well, I mean, you're bouncing off bottom, like that happens. Take a look at this. Let's go to finance.google.com. Let's go SPY, and let's just do a little bit of year-to-date comparing. We haven't done this for a little bit. Take a look at this. So year-to-date, holy moly. Let's get this to update here. Okay, year-to-date, the SPY is only down 5.8%. It was just as low as about 10% down. Let's drag this here. Year-to-date, pull this out here. Look at that, 12.71% down. Bottomed out on March 14th. And what I really like seeing is that you've almost got a triple bottom formation here on the SPY. Look at that, Feb 23, 24, 23, 24 right over here. That's because we kind of started rallying again on the day of the invasion, which I know is wild. But then you did get lower levels on the 8th and the 14th. We go over to QQQ. We see a similar on the year to date, with the exception of the fact that QQQ is down 11.22% year to date. But you see these similar bottoms around the similar dates here. And in my opinion, these are relatively strong support levels. That's why I've drawn my 0% Fibonacci's here. And anytime we can really buy under that about 23-ish% fib, I'm a buyer. I'm a buyer on that level. I love it. This doesn't mean things can't get worse, but we've already got so many uncertainties. I mean, there was a commenter earlier who left a comment, and I thought it was a really good summary that they left. I said, hey, here are just some uncertainties that we've got going on right now. Saudi Arabia, large oil field attacked by missiles, causing large fire. North Korea launching an ICBM with range capabilities of hitting all of the U.S., right? I mean, this is how many times over the last 20 years have we had North Korea rattle their saber, right? Ukraine-Russia war lasting, well, continuing, right? Like, when is it going to end? In fact, it's one of the headlines we're going to take a peek at right here. Is we're going to talk about the Donbas a little bit. Obviously, inflation very, very high. Fortunately, we've got some anchoring of that inflation and the inflation expectations. But a lot of fears about rates rising much faster than expected and those commodity prices staying higher for longer. And so that's why we've got that red across the board today. You've actually got red and gold in 1954. But here you go. Look at that right back up here on Brent. This morning we were sitting at about 116 on Brent, almost back to 120 here. Seeing a lot of movement around this 115 to 125 range. That is, we keep kind of bouncing within that. When we ran up to 130, 140, we came back to that range. When we ran down to 90, we came back to the 115 to 125. So this seems to be the area that if you stretch above it, you short. If you stretch below it, maybe you actually go bullish on oil, right? Because we keep going, we feel relatively range bound. So, yeah, a lot of things to consider here in this market. It's definitely not the kind of market where it's like, oh, that's it. Take out all the margin and go all in. It's not the kind of behavior that I would actually really ever recommend, but certainly not in this market. I'm much more of a fan of take the money that you have, money that you don't need for taxes or other purposes, find good entry points, get in and stay in. Unless, of course, we have any kind of massive Federal Reserve U-turn that says that's it, we need to force a recession. In the facts of that, the details of that will become evident well before the Fed actually does force a recession. And that's because we know, oh, I froze there for a little bit. There we go. Stupid thing here. Yeah, thanks. And that's because the Federal Reserve has told us exactly what they're looking for. Unanchored inflation expectations, inflation not inflecting down in that 3 to 4 month time frame that we're expecting. We're not, I don't think anybody's really calling inflation transitory anymore, but it certainly shouldn't be. But it will go away eventually. It's just a matter of how long. And if it doesn't start ticking down in 3 to 4 months, we're going to have problems. Mortgage rates are already going up. I mean, this is old news. I've been talking about mortgage rates going up for like the last, 8 weeks now, and suggesting that there was going to be a lot of pain coming for the real estate market in terms of just rates. And so that's exactly how it's playing out. So anyway, we'll keep an eye on that. Yeah, the cam froze there for a second. It's because I tabbed away there for a second. Anytime I tab away, it does that. I just don't tab away, Kevin. It's very simple. Anyway, all right. So as you know, I do have to just quickly mention that yes, there is a coupon code expiring tonight. Yes, there are often other coupons, but the price always goes up. It goes up in a straight line. And the sooner you join and get lifetime access to the programs on Building Your Wealth and the private course member live streams with me, the lower your price is. So let's take a peek at this here for a second. Russia says Donbas is Ukraine's focus. Impossible shift in aim. Military comments may be effort to cover slow progress of war. Let's take a listen to this here. The Russian military said it's focusing efforts on taking control of the Donbas region after a month of fighting that's yielded limited territorial gains. Keep in mind, this is one of the demands coming from Vladimir Putin that, hey, he wants to carve out the Donbas. And he also is demanding that Ukraine recognize Crimea, the illegal annexation of Crimea, and amongst other demands about, Financial Times put together a list of about 15 demands, NATO neutrality, or actually no NATO, and then Ukrainian neutrality, I should say, is the better way to put it. A quick note here. I just got a note coming across the wire here. German Chancellor Scholz says Russia's strategic situation will deteriorate more as more countries try to become independent of Russian energy. This is a big discussion happening in Europe at the same time. So it kind of feels like you've got Russia getting pushed over to the Donbas region. So they're kind of pulling back. I mean, they're getting kicked out of the Kiev area. I mean, they're getting wrecked, which is wonderful. In fact, the New York Times did this incredible expose yesterday on just how the Russian military is just bluntly failing, about how, they're not using encrypted radio communication channels. As a result, people can eavesdrop on them. And they're hearing the military just panic with a lack of coordination. Now, you always have to wonder like how much of this is just propaganda to show like Russian incompetence or whatever, versus how much of that is just cherry picked, or a combination of the two, right? But in terms of Russia's ability to actually control cities, the proof is in the pudding. They're not doing too well. But anyway, take a look at this. This is potentially a sign here that Moscow may be backing away from hopes of taking larger swaths of the country. And as they say here, the Kyiv-led forces have halted the invasion in many areas. Moscow's most detailed official accounting of its military performance, Vladimir Putin announced, that's a little bit old news. Okay. Denazification, demilitarization, stalled drive. Okay. So here's just a map. This is really what Russia wants, is they really would love to carve out a whole slice over here and kind of almost think about it. Like the way I think about it is, and it's not the best example, but it's a buffer zone, right? It's kind of like North Korea. If you think about it, you've got China above North Korea, and then you've got South Korea below, right? South Korea is obviously a big ally with Japan and the United States. China obviously wants to distance itself from the United States. And it's interesting that North Korea actually serves as a buffer between the two. And so the more radical North Korea seems, so that's it, we're testing the ICBMs or whatever, the more the focus is on that buffer rather than on China. Now, this is very different from the Donbass. It's not like the Donbass would ever be expected to have like weapons and like some crazy dictator that's going crazy. But when you have someone crazy in the middle of two people that don't really like each other, the focus is on the crazy instead of each other, right? So it's I don't know. I think it's kind of interesting. Very, very interesting. Anyway, so wow, that's I joined. Oh, there you 50% through. That's awesome. Aaron Dean, thank you so much for the shout out. I joined last month the Stocks and Psychology and Money course. I'm a little over 50% through. Love the course. Highly recommend getting it if you want to improve your life. That's amazing. Yeah, there's obviously there's been some there have been some people commenting things like, oh, the only thing you learn is by the day. It's not true. It's like totally not true. And so it's kind of interesting. Sometimes you see comments, and it's like you can clearly tell who actually is in the course and who's not, or watches the content. So it's quite interesting. But thank you for that. I appreciate that. Love your enemy because they never change. That's an interesting way to put it. Yes, the neon supplies are absolutely an interesting issue for Ukraine. Absolutely. Okay, so opinion on food shortage, fear to peak or pass before, but yeah, it's an interesting point. The food shortages, and when we get that sort of peak inflation hit, probably isn't actually going to hit us for about 6 months. The benefit, or I shouldn't say benefit, there's no benefit to this. The best case scenario would actually be that this war collapses and ends by May, which I expect it to. My thesis holds that this war is over by the end of May, and Ukraine's already alluded to the fact that this war will likely be over before May even comes around. I made my assumption before they did, or at least publicly released theirs, because I don't want to sound like I'm just like copying them. But that was sort of my estimate of the situation, and more and more kind of reiterates that. And if I'm wrong, I'm wrong. But look, I've said this before. It's better to make a prediction, and then if you see changes going in the opposite. Oh, I froze again. Why is this? I could tell you, I'm gonna take this Mac, and I'm gonna chuck it out the window. It just kills me. Anyway, at least you can still hear me. Yeah. So, okay. Anyway, it's important to make predictions, because if you don't make predictions, you don't know how to identify changes. If I make a prediction that the war is going to be over by the end of May, and things are getting worse, not better, well, then that prediction might be wrong. But I'd be able to identify that sooner by making a prediction and comparing, right? To the original facts that led me to believe that. But everything I'm seeing right now, every bit of research I do on Ukraine, is that probably will be done by the end of May. So you'll have this really weird lag in the food supply crisis. So you'll probably, in my opinion, I'm hoping this war is over by May, but then you're going to have this food shock probably in like September, August, November, right around midterm elections. And that's a problem for other reasons. Politically, it's a big problem. We'll probably have short-term pain in markets then. But as long as it's coupled with like the war's actually over, we could be in a lot better position then than we are now market wise. So that's we'll see what happens. Obviously, the worst thing would be if we end up still at a war by September, October, at the same time as those food crises hit us. Because we do have stocks and stores of grain and backlogged supply of food that we keep in storage on purpose for things like this, not just in America, but Europe. Usually those sort of emergency supplies that can get filtered into the market last about 3 months. After 3 months, then we start seeing issues. And the expectation is 6 to 9 months from now is when we probably have peak problems for the food supply, which is honestly worst for people like people who live in the Middle East, people who live in parts of Africa, especially poor parts of Africa, like Congo, so North Africa even. These areas are going to have issues. Egypt, substantial amount of their food imports, especially their wheat imports. I think they import 70 to 80% of their wheat from Ukraine. It's insane. Anyway, I think China actually is very clear here that very clear here that they're in a tough spot. They can't help Russia that much for risk of getting slammed by the West. And they know that would happen if they helped Russia too much. So the best thing they could do was just be quiet and chillax China. They've got plenty of their own problems. They've got their own economy on the door of a recession. And the last thing they really need is to create more strife in China. All right. So, all right, what do we got here? Let's go ahead and take a peek at the markets again here. It looks like QQQ is down about 0.5%, and a little bit of a recovery there on Trade Desk by about 1%. We got a little bit of sort of you had this belly over here down to about 63. Looks like you're getting a little bit of a recovery into the close, even on a firm, slight little recovery here. Low feels like a low vol day here on a firm. It's been a pretty rough ride, this particular one. Yeah, but a little bit lower vol than usual here, so we'll keep an eye on that. And On is still down about 20% there after those earnings. MQ is another stock a lot of folks keeping an eye on for consumer credit cards, private labeling of consumer credit cards. NEO still down that full about 10% here, although not trading substantially lower than where it kind of has been. And this $20 range seems to be a pretty decent support, although we did go down to 13 for a very brief period of time before that Fed meeting. And in my opinion, that was just because of a pure lack of retail buying pressure. Retail most heavily capitulated at the beginning of March, leading to some of the lowest levels of stock prices that we've seen. And those really created opportunities for buying because there was so little retail demand. And so you saw a lot of especially retail stocks got hit very hard there. Pretty hard. Etsy news. Ukraine Etsy sellers are seeing their accounts closed with no explanation. That's interesting. Yeah, that's something to keep an eye on. Nicholas still trying on the delivered mobile charging trailers. Interesting. Does Tattooed Chef skyrocket when the food shortage comes? I actually don't think so. One of the issues that you have is Tattooed Chef is very input cost driven, and the food business is already extremely low margin because if you raise prices, people buy other stuff. If you don't raise prices, you end up getting screwed by compressing margins when it's already very expensive to not only ship ingredients from Italy to the United States, which is something they talk about doing, shipping some of their ingredients over, which is a huge problem because shipping costs have gone through the roof. But on top of that, your input costs like canola oil, soybean oil, sugar, even milk, all these things are getting ridiculously more expensive. So probably one of the last places I'd want to be right now would be something like a TTCF. In the short term, maybe in the long term it'll do well. Does this investor know that there are actually profitable companies to invest in, not garbage he talks about? Oh, Matthew Wilson. Matthew Wilson has a little owie wowie in his butt and wants to be a little meanie baby. Oh, really? Really? Because Trade Desk isn't profitable, because Tesla isn't profitable, because Apple isn't profitable, because Nvidia isn't profitable. All companies I have massive positions in that make up the bulk of my portfolio. Yet you want to pick one of the companies that have a smaller position in, like Matterport and Affirm, and go, up, see, garbage companies, they lose money. Have you ever heard of companies that reinvest to grow their business? You know, a business is not a bad business because they're losing money in an earlier stage of growth. That doesn't make a business bad. I'll tell you what does make a business bad. Paying high premiums for a business when growth is stalling, trends are falling, and they're unprofitable. So, for example, if you look at, I mean, quite frankly, I mean, we looked at the earnings a couple days ago, and I don't want to keep bagging on it, but we look at the revenue growth of Tattooed Chef. It's bad for the amount of money they're spending on marketing, which was originally the reason I sold the companies. I said, I don't think they're going to be able to market their way up to higher revenues. So far, that's been a correct prediction. They're spending more money on marketing, and we're not seeing the revenues go up the way they should, right? Those are concerns. Now you have money-losing companies that are showing a lack of growth or deceleration growth. That's a problem. That's a problem. But Matthew's just a Karen. It's okay. You know, there have to be Karens. Matthew's the kind of person who comes and leaves a comment on the channel in January going, "You're an idiot. We're in a booming economy." And then you know, 3 months later hates me for you know, uh, doing that. But then they end up doing the same thing. So at much lower prices. Matthew's just butthurt. So, all right, what else do we have here? We have Disney. Disney actually holding up today. And if you look at the search trends for Diz, it's really, really incredible what you're seeing for the growth of this sector here. And you're seeing that flight to safety a little bit in Apple. Look at that, Apple 174 again. That's crazy. That's a wild move. I just picked up about $1.4 million of Apple at 152. And I can't believe it's already at 174. But it is interesting. You are seeing a preference towards the large caps, right? Large caps, mega caps, mids and smalls consistently lagging. The more yields go up, the more the mids and smalls are getting burned. It's just not a good market right now for the mids and smalls. And so, like, Monday is a great company with a lot of growth, but it's getting reamed. It's down 12% today. Does that make it a bad company? No. It's just the mids and smalls aren't where people see a flight to safety. Same thing with Matterport. It's just not where folks see a flight to safety right now, or an opportunity to be in equities, but then be safer. You're better off taking, well, certainly something where interest rates are going up, in my opinion, taking money from, and I hate to say it because I really like SoFi, but if you're looking for less volatility and safety, you're better off taking money from something like a SoFi and throwing it into like an Nvidia, a Tesla, or an Apple, because of the way the market is trading now. But that would be a trade. And the expectation would be, once we get back to a more risk-on attitude, that maybe we actually start seeing larger advances in the smaller caps. We're just not seeing that right now. So on those red days, you get those exceptional declines in the small and mid caps, and smaller declines in the large ones. You know, Adobe, Tesla down about 0.5%. Although Adobe, when they reported earnings, there was a little poopy doopy. But anyway, the Nvidia trade was over yesterday. Yeah, I actually, somebody asked me in the comments, when did I buy Nvidia? I bought 5,000 shares on March 24th and 2,000 shares on, February 24th, March 2nd. That's when I bought my 7,000 shares of Nvidia. Of course, all of my trades are always posted in the Stocks and Psychology of Money group, so you're always welcome to see my trade history. I post those within, you know, I oftentimes I even post them before my order goes through. I put the order in, and the order is still open and pending, and send the alert. I just want to send it as soon as possible. So right here was the March 24th buy that I did of 5,000 shares of Nvidia. You actually did see it rotate down a little bit more. I think my next purchase was over here at 3.2. So 3-2, we were sitting about 239. And that was my 2,000 share purchase, and my larger 5,000 share purchase was over here on Feb 24th, which was around 215, 220. Man, I think it was 220 right there when I bought it. But anyway, you actually did see Nvidia rotate down a little bit more. It went down as low as 206 over here, but has since exploded. So this is another one where if I could get more bites at the apple on Nvidia, I'd be happy to take it. Similar story with Enphase. Tesla, the more bites at the apple I can get on these, the better. Apple's obviously done some crazy running, and I'm not a believer that the oil rally will last. Certainly, I mean, once war ends, that'll rotate down. Apple pays another round of rare 200,000 bonuses to some staff. Wow. Okay. No, don't know anything about ASO. Let's see here. I'm really not looking to expand into new stocks right now. Academy Sports and Outdoors, honestly, I've never even heard about it, so I couldn't even speak about it right now. What's wrong with Cathie Woods, do you think? I actually don't think that anything's wrong with Cathie Woods. I think she is doing what she has always done best, which is making bets on innovation and ultimately on deflation. But every good investor goes through periods of substantial pain. I mean, there's substantial pain periods for value investors, substantial pain periods for growth investors, sometimes for innovation investors. So everybody kind of gets their turn, right? Because the market's constantly rotating. I personally don't like trying to chase that rotation. I really don't like selling and trading out of the larger portions of my portfolio. I've always been a very much buy and hodl my core 80%. Obviously, I made a bet that the macroeconomic situations were going to worsen between January and February and March, and that ended up being right. But that doesn't mean everybody should do that. I think the best thing to do is, quite frankly, for most people, is to mostly have a basket of index funds. And if they want exposure to individual sectors, maybe pick those. But you can't be perfect with all of your buys. But the beautiful thing about America is you can do whatever you want. Oh my gosh, look at the explosion on Clever Leaf today. We talked about Clever Leaf. Wow, we talked about Clever Leaf this morning. This is incredible. And this morning I talked about how maybe there would be a play to invest in cannabis companies and sort of ride the hype of Congress passing something. And intraday, this company just doubled. So if you look back at my morning live stream, you'll see exactly this. This is really quite incredible. I mean, geez, imagine if you had options on something like this. Yeah, look at this. Where are we? Options over here. Look at this. 500, 1,000%. I mean, you wouldn't have the liquidity to do much with options here, so you probably couldn't get a lot traded. But some of these options up 1,000% today. That's 10x on this insane movement here on Clever Leaf. Holy moly, that's really. I mean, congratulations. I mean, geez, if let's just put it this way. If I had bought Clever this morning and I put, say, 50K into it or whatever, and it doubled to 100K, I'd be like, thank you very much. I am taking my tendies. It can obviously move more, and it's worth knowing that. But wow, that is pretty incredible. ARC Energy and Commodities ETF, that'd be interesting. Let's see. People need to give her a break. I agree. Cathie with the creamery. No, I support Cathie. Let's see here. Do I like ADA? Yeah, Cardano. Absolutely. So that's the only cryptocurrency I have right now, with the exception of some smaller positions in like private equity. Yeah, but yeah, I'd also consider staking my ADA, of course. How people manage time with the course and full-time job as you're joining. Yeah. Okay. So, question on joining the course with a full-time job. Yeah, one of the things to keep in mind is you want to sort of pace. There we go. Hold on, it's frozen again. I'm just gonna open up a tab. You want to pace, in my opinion, the way you go through it. I think the best thing to do is usually set aside 20 minutes a day, either before bed or when you wake up in the morning as you're getting ready. And brushing your teeth or whatever, and you're getting ready. I think that's always a good opportunity. So you want to pace that out. Shout out to those of you joining the course today. We do have that coupon expiring today. Let's go ahead and listen into the bell.
Go positive here on the week, up 2.3%. So a second week in a row of resilience for the overall market, despite some weakness in the small caps. NASDAQ.
Look at that recovery there. We actually rallied there on some of the indices.
Second in a row. That's going to do it for me on Closing Bell. Have a great weekend. Now into overtime with Scott.
Wow. Wait, what? That's incredible. Let's take a look here for a moment. Yeah, look at that. Holy smokes. We full on rallied into the close. I mean, the buy the dip happened at the end. Remember, retail is most active at the beginning of the day and the end of the day. That also does coincide with oftentimes institutions executing their trades. And this looks like a bullish move here into the indices. We were all red when we started this live stream, and now we're at up 0.44 on the Dow, up 0.51 on the S&P. The NASDAQ only down 0.16. This is actually a pretty incredible little rally into the close here. Weak hands got shaken out of the market. There you go. You got to say, being a growth investor on days like today is incredibly frustrating. It is. Yeah, it is really, it can be very, very frustrating. Absolutely. There's so much good info in the course. I bet people had dreams about Kevin the first week. I appreciate that. Thank you for that. Okay, so I want to understand this a little bit more. Let me see what moved here into the end here. Look at that. Even the little rally here on Tesla right into the close. How about some of the ones that were getting whacked today? Affirm, yeah, even a little Affirm rally there into the close. Lemonade. No, didn't really see it on Lemonade. Trade Desk. A little bit of a recovery. Let's look at the SPY here. Yeah, SPY had that rally into the close. SPY now officially closing above that 50% retracement. It's pretty awesome. Lawrence Gray says racist. Wow, that's I mean, somebody, I don't know who you're calling racist, but that's kind of sad to see you come into a stock market live stream and just spew hate. You got to be a real sad person to do that. I had a dream about Kevin being a college professor. Me too. Mortgage rates knocking on the door of 5%. Absolutely. I am really your fan. And when you were not doing public live streams, I got destroyed in my investments. Now I feel relaxed. Oh, thanks. What's up, Rudy with HITI? Crypto Tendies. What's up, my crypto journey? Thanks for the $50 donation. That's amazing. Didn't dream I was too excited to sleep because of the course. Oh, stop. That is funny. Lawrence, a beta. Oh, that's it. One Eyes wants attention too. That's it. Now. Oh no, I froze. There we go. Stupid computer. I blame it. I blame my computer. Thoughts on PayPal? Yeah. So all financial service stocks, I am personally nervous about. And I'll talk about Matterport as well, but I am nervous about the financial services stocks, which, I will say sucks. But I do think the consumer ones, like credit card companies, are what make me more interested. Like that's where probably the only place I would want to be right now is credit cards. Not necessarily Marqeta, because you do have that small mid-cap issue with this one. But I'm interested in Visa, for example, because the spending on fun is just ridiculous right now. Now that could inflect down, and so you want to watch the Google search trends on fun spend. Restaurants near me, casinos near me, whatever, right? But PayPal going into this lending environment, it's not a time that you really are expecting a lot of individuals to open up new accounts at Cash App, PayPal, Robinhood, the brokerages. I think it's going to be a rough time for the brokerages. And, obviously PayPal derives some revenue, as so does Square from brokeraging. So I'm not highly enthused, but they're great companies in the long run. Matterport is going through, and this is a tough thing for Matterport, and we always knew this was coming. They're going through a transition of making a lot of money from hardware, selling their cameras, to now going to just trying to sell the service, because the hardware is now virtually in everybody's phone. So, it's incredible. Would love to have you in the courses. Welcome aboard. let's see here. Do Coinbase and Shopify as long-term investments? So same thing with Coinbase. And of what I've just mentioned, one of the issues that I have with Shopify is I am worried about consumer discretionary right now. Do you think we're going to get some pain in consumer discretionary? Uh, all right, let's see. Thoughts on chip designer makers? Love NVIDIA, Qualcomm. Don't know much about AVGO and TSM. I think the China risk is overblown for TSM, and so I like it. I like TSM. Yeah, Coinbase has been rough. Remember, one of the things to keep in mind when it comes to Coinbase, thanks for the $5 on GGPI. Personally, not the biggest bull on GGPI. I hate to say it. But yeah, one of the things with Coinbase is, remember, they're trying to shift from transaction-based revenue to sort of secondary forms of revenue. Yeah, and then this happens as there's more competition in the industry. Obviously, they're getting a lot of competition from like FTX and other companies, and so this is quite challenging. In fact, this sounds biased now, but this is a perfect place to say it. This video is brought to you by FTX. If you want to get free cryptocurrency on every transaction, make sure to check out FTX. Go to metkevin.com/FTX, download their app, and if you want, you can use code MEETKEV, and they'll ensure that you get that free crypto on every trade that you make over at FTX. But anyway, that kind of competition is I think going to hurt Coinbase, at least for in the short term. In the next 6 to 12 months, it's gonna be an interesting transition. No, the China-Taiwan risk is overblown. I was referring to TSM, Taiwan Semiconductors. Why do I keep freezing? What is this? It's so annoying. Kevin should fire his barber. I can't fire myself. I just can't. Yeah, I don't like REITs. But stay tuned. I'll have more coming out on REITs. I really dislike syndications. I think syndications are a ripoff. Post-it says something was inappropriate. What was inappropriate? 3D printing companies. I actually don't like 3D printing companies. They're not for me. Would I bring Sam from Tattooed Chef on? Yeah, absolutely. I would do that. Bought the course today. Happy to see about your short-term plays. Eager to learn about options. Well, welcome, Dave. Thanks so much for joining. Lock in an interest rate now or wait for home prices to draw. I mean, I'm always a fan of not trying to speculate on the interest rates. In my opinion, they're gonna go up for a while. But you could, in my opinion, only get a loan that you can afford. You're gonna pay higher rates now, and don't expect that you will always be able to refinance, but hopefully you will be able to in the future and get those back down. Platforms like M1 Finance and those investment platforms tend to only, yes, this is true. You do have the trade windows with M1 Finance, but M1 Finance, their market share is substantially larger than like Robinhood or some of the other companies. Are you getting arrogant on your predictions? I wouldn't say arrogant on predictions. I think I recognize that, I make a lot of predictions, and so far they've worked out for the most part, and so I'm very happy about that. But it could always end up being wrong. We talked about a firm in this one. You paid off a third of your course the first day with Zimputs. Let's go, John. That's awesome. Good for you. Happy for you. Yeah, the only stock I'm down on right now is Affirm. It sucks. It's the only one I'm down on right now. Not much. Well, actually, no, like 6 or 7%. It's a good chunk, right? But every other position I have is up, so I'm really happy about that. So calls on Hut 8. I'm bullish on crypto. I'm bullish on crypto. Okay, so this, Augustine, this is not what was said. This is I understand that there are some folks who have misinterpreted this. and I've addressed this in comments, but I'll address it live here. I did not tell Chicken to go to communist China. I did not say that. I said, if you as a viewer do not value competition, then you should go to communist China and enjoy communism there, right? Because I was advocating competition, that the free market works so well because we have competition. I wasn't telling Chicken Genius to go to China. That's not what I said. I see the confusion, but it's not what was said. And if you watch the last, 30 seconds of that video again, I think that becomes clear with my extra explanation here. But no, I wouldn't advocate anybody move to communist China. I think it's a terrible idea. Oh, you paid for your course with the play earnings? Oh, that's awesome. That's awesome. I remember that play move. Do you team call options? I don't know what you mean with team, but I do call options. Lots of options. Usually smaller options. Would you consider buying Upstart? No. I think it is a trader stock. And I do think you can make money on it, but you just have to be careful. I just lending again. This is like all about lending. I don't see good things in the future here for Upstart. Ignore the stupid weenie baby haters. We're flip floppers. We flip to prevent losses and flip to buy pain and flippity floppity flop. That's a good one. I appreciate you saying that. There is a discount code for current course members, and you can ask about that in the in any of the Discord chats. Oh, I'd love to have Jensen on. That would be so amazing. That would be really cool. I should reach out. Goal is to become an accredited investor. Haven't been able to get deep into them. Wondering content is very wondering where you'd focus on energy. Tesla and Enphase. Not financial advice. No Uber for me. I actually really agree with what what Brett Winton over at ARK says. I really liked what he said. He says, you can't. The problem with Uber is the way for them to make more money is to charge more fees because they're not profitable, right? So they have to figure the whole margin issue out. And it's just that's not innovative. Just charge more to make more, right? That's not really an innovation because you're not providing more value for the higher fees that you're charging. It was a very interesting discussion. You should watch it. Stepsis My Epsis wants to know, Kevin, can you rent me my garage till I recover from Honest My Bonus? Very bad food company. Tattooed Truckers. Voyager My Joyager. Beyond My Meat. Oatly the Goatly. Corsair My... Oh my gosh. These rhymes are bad. Stepsis My Epsis. Oh my gosh. Yeah, I'll rent you my garage. My garage is available right now. I'll take care of you. Is your course a one-time fee or monthly? It's a one-time. Just one-time fee, and then you get lifetime access. So when I add new content, look, see, here's the thing. Some people bought my programs 2 years ago, 3 years ago, or 2017. I'm still here, right? And so they got in at a lot lower prices. But the cool thing is we don't know what's going to change in the future. Let's say there's a real estate crash. You're going to get the updated information on that and my thesis on that in the course member live streams. Let's say there's, I don't know, stock market goes nuts in either direction or whatever. All my first thoughts go there. But yeah, it's a one-time fee. Mullen Squeeze. I don't think so. I think right now the attention's really gone to cannabis. And so remember that when that momentum moves, it moves. Oh man, it got whacked today. I tell you, look, I don't want these stocks to go down because I know that some of you are playing these and I don't want you to lose money. But when I say momentum, when it goes away fast. You got to be careful on these. I mean, I've been saying for 3 days now, be careful on Mullen. Set those trailing stops. That doesn't mean it can't run again, but no. Generally, squeezes don't happen. So this whole concept of short squeezes does not happen. What happens is retail gets invigorated by the idea that a squeeze is possible. And so more retail comes in, sucks up the order book. But actual squeezes are much less likely. Even though that is an unpopular opinion, people get mad at me for saying it. It's true. Yeah. Give Ross Gerber. Well, Ross is really excited about it. Thank you, Kevin. You were saying meat breath. Yeah, I actually I don't know if that I mean is that really that offensive? Like, if you're like, I mean, like, what if it's like delicious meat? Like, what if you're like having hamburgers together? Like, I mean, I guess if it's garlic, it'd probably be not such good breath. Anyway, have you ever thought about sort of selling course access as NFTs? No, I think NFTs work really well for events, but it's interesting. I mean, accredited is not something that is very complicated. You could just Google, investor accreditation. It's really either solo income of $200,000, $300,000 as a couple, or net worth over $1 million outside your personal residence. We will probably have some opportunities coming up for accredited investors, and we'll start with course members. And then the others would be people who would sign up to metkevin.com/series A. You could go there. It's free to put your email in there. Just you'll have to wait about 60 to 90 days to hear anything, probably. I would run a half marathon. Yeah. In fact, probably after this, I've got a couple more projects to finish here. We go to run, and then we're doing a later course member live today. Sometimes it's very rare that I reschedule the course member lives, but some people like that because it gives us an opportunity to get people at a different time. I used to do public speaking. Can I credit this $5 donation to your course purchase? Sure. Email us after you buy it. Even though YouTube just took 30% of that. No, I think Cardano is a phenomenal technology, and I really have a lot of faith in Charles Hoskinson, even though he doesn't come on my channel. It's okay. I still have a lot of faith in him. I like what they're doing. I like their technology, and I like it more than Ethereum. Although I do have a good place in my heart for Ethereum. Will the course prices go down in recession? No, because it wouldn't be fair to people who joined before. Real estate course or stocks course first? It depends where you are. A lot of people just bundle both of them together, but in this market, I'd probably start with stocks, but I would want to prepare for shopping in real estate. So I might, like, if you like the stocks in the first, month or so, grab the real estate one and try to get through all of that by the summer, because I think you're going to want both of those skill sets. You're going to want a lot of real estate skills come towards the end of this year, I think. So I think there are going to be some deals to be had. No guarantees, we'll say. Can you explain how my lender told me not pay the refi closing payment, to hold it since it'll take longer to make it? What? Can you explain how? I have no idea what you're saying, Hector. Sorry, maybe you could rephrase that one. Maybe it's like a forbearance thing or something like that. Options are in the Stocks Insight course, and we're adding more content to that as well. I think the weekend coming up now is planned for wealth course, and then we're going back into more options. I think the stocks course is like $550 or something like that. I'm a firefighter in California. My wife is a teacher. She makes $65K. I make $100K. We inherited a 1,200 square foot home. Should we rent it for $1,300 to $1,500? Oh, we could rent it for $1,300 to $1,500. Should we rent it and buy a house, or what's your opinion? You know what I would probably do is I would probably move into it if you can. I don't know if that's an option. Move into it, and especially if you're renting right now, and then refinance it as a homeowner occupant, because you'll get a better rate and loan terms with that. And then I would potentially take some of that money and invest into a rental property, like a good deal. But I would be patient. Be patient. Wait for a good deal. Accepting people to live with me, learn investing. That's funny. I cannot see the value of NFTs. Maybe I'm old. I actually don't like a lot of NFTs either. I think the only NFTs that make sense are ones that give you access to something. Yeah. Tickets, like a ticket, exactly. I know I will pick up more TTD under 60. To be interested in making videos on private companies listed for pre-IPO? Maybe. I mean, I'm not uninterested in it. I do have some Palantir. Okay, I do want to see briefly how the market is behaving right now. Because obviously today was a little bit of a rough intraday, but it's really relaxed here, which is nice. Let's see here. Let me just sort by after hours. Arcimoto's up another 4% here in the afters. I gotta post my Arcimoto video. Cloudflare 119, Enphase. Not much substantial movement here in the afters. Oh, Clever was insane. Smile Direct, Delta. I mean, it used to be like a $10 stock, right? Which is crazy. We used to trade that. Yeah, it's incredible. Okay, so yeah, Firm had a little poopy doopy day today, but it actually didn't end that terrible. 5.89, almost back over 42. Well, that's the only one I'm down on. Oh well. How about Tesla? And Cardano is sitting at 109 right now. So take a look at. Oh yeah, and here's Tesla. Nice run into the close, really, really cool. 10-10 now. My Clever calls are printing. Yeah, no kidding. Yeah. Any advice to buy your first rental property if I want to rent one I currently live in? Yeah, that's a great way to get your first rental property is rent the one you currently live in and then go find a fixer-upper for your next one to live in, right? Google at these prices. I agree with the limited supply for BTC. I think that's really neat. I like that a lot. But I don't think it'll replace the dollar. Google. Yeah, nah. Probably not. Yeah. In this market, if you have just 10K to invest, I probably would just go for an index fund until you could find a good deal in real estate. Not financial advice. When do I think the 10-year will hit 3%? Within 3 months, 3 to 6 months. Okay, I must go. I will see you all. Thanks so much for being here. And we'll see you in the next one.